Business news for you now. Kate Moody's with us in the studio. Hi there, Kate. The British economy just posted its worst financial year since the financial crisis.
Yeah, perhaps no surprise for anyone who's been listening to those rather dire warnings. The 1.4% expansion is largely related to Brexit, although Europe and the global economy are also seeing signs of a slowdown. With that in mind, the government is racing to finalise trade deals that could keep businesses on track once the UK leaves the EU at the end of next month. Selena Sykes explains.
It's the UK's slowest annual growth rate in 6 years. The British economy grew by 1.4% in 2018, down from 1.8% the previous year. Other European economies have also seen a slowdown as trade tensions between the US and China weigh down on global growth. But it is impossible for the UK to ignore the elephant in the room. With less than 50 days to go until Brexit, the economy is dogged by uncertainty.
Everybody hoped we would be able to resolve this much earlier on in the process, but it is in the nature of these kind of political negotiations that they tend to go to the wire.
Falls in factory output and car production were largely behind the slump, according to the UK's Office for National Statistics, which also forecasts slower growth in 2019. As the Brexit political deadlock drags on, the government is moving ahead with its preparations for a future outside the EU, signing a deal with Switzerland on Monday that ensures the two nations will continue their €36 billion annual trade.
We are confident that we will be able to maintain a very high proportion of that continuity of trade. Why would partners not want to have access to the world's fifth biggest economy?
In 2017, Liam Fox said the UK could replicate around 40 continuity agreements that would replace current EU trade deals once the UK leaves the bloc. So far, only 4 have been signed.
Meanwhile, the British government is being sued over its handling of contingency plans for post-Brexit freight shipments. The Channel Tunnel Group and France Manche, the companies which run the tunnel that runs underneath the English Channel, said the government had not consulted them before awarding ferry contracts to 3 firms, one of which was embarrassingly cancelled this weekend. The Department of Transport confirmed on Saturday that Seabourn Freight did not in fact own any ships, and it pulled the plug on its €16 billion deal. Delegations from the US and China have begun the preliminary stage of a third round of trade talks. The official high-level negotiations begin in Beijing on Thursday. A 90-day truce is due to expire at the end of the month. Higher tariffs on hundreds of billions of dollars worth of goods could then go into effect if no deal is reached. Intellectual property rights and tech transfers are among the sticking points. Let's check in on the day's trading action now. Investors in Europe appear fairly optimistic that those talks could result in some kind of a breakthrough. The major European indices climbed on Monday. The CAC 40 and Frankfurt DAX up about 1% each. Italian banking stocks, meanwhile, rose 7% as they passed a key ECB test. Wall Street is muted this hour as investors worried that stalled budget talks in Washington could lead to yet another government shutdown. Tesla shares, meanwhile, up about 3.5%. Moving on to some of the day's other business headlines now. Apple shipments of iPhones to China plunged 20% in the last 3 months of 2018. The figures, released by research firm IDC, tie in with the tech giant's lower revenue. The report suggests that China's overall smartphone market shrunk by nearly 10% in that quarter, although domestic manufacturer Huawei outperformed and increased its own sales. Switzerland's biggest bank is reorganizing its payment policy. 10,000 UBS employees will see their individual performance-based bonuses scrapped and instead receive a fixed percentage of their annual salary. And Facebook is stepping up its efforts to combat fake news in India ahead of a general election in May. 5 new partners are being brought in to check facts on news stories shared on the social network in a total of 6 languages. India is Facebook's largest market by users, with more than 300 million active accounts. Last week's veto by the EU competition watchdog of a planned merger between French rail company Alstom and German Siemens has sparked a wave of protest from business and political leaders. Many say European companies need to consolidate in order to compete with Chinese and American industrial giants. But some EU firms whose mergers have been denied are holding up just fine, as Georgina Robertson explains.
Derailed. The mega merger between the French giant Alstom and German giant Siemens was a bad deal for passengers, according to the European Commission, as it would have resulted in higher prices for the signalling systems that keep the trains safe. The announcement was followed by calls for changes to European competition rules.
Over the past few years, the group Pechiney has disappeared after its merger was blocked. We've seen the breakup of Alcatel-Alstom, Alcatel submerged into Nokia, and Alstom General Electric. Every time we wanted to fight for European champions, we couldn't even form them, as the priority was competition at the heart of Europe.
Some blocked mergers have gone on to create solid, separate companies. In 2001, the Commission refused the merger of two electric giants, Schneider and Legrand. Today, both companies are successful in their own right. Their revenues for 2017, nearly 25 billion euros for Schneider and over 5 billion for Legrand.
If we want our European companies to be competitive against their US, Chinese or other counterparts, they need to innovate as we have higher production costs. It's simply part of our development. By innovating, we can be the best. Monopolies do not innovate.
However, refusing a merger is exceptional. In 10 years, Brussels has only quashed 7 mergers, but has supported over 3,000.
The train stations of Paris are getting a facelift just in time for the Olympic Games. The French capital wants to renovate at least 3 of its biggest transport hubs before it hosts the Summer Games in 2024. At least 1.2 billion euros are being invested over the next 2 years as tracks, waiting areas and stores are refurbished. The work will focus on the stations Austerlitz, Saint-Lazare and Gare du Nord. The latter is where the Eurostar arrives from London, among the busiest stations in Europe.
The Gare du Nord transformation project for 2024 is the largest transformation project SNCF has carried out in a station since the end of the 19th century. The objective will be to triple the surface area of the station to allow it to accommodate the 30% more passengers that our traffic studies promise us by 2030.
It's rather welcome news, I'd say, for any commuters here in Paris.
Yeah, good
Or
news.
indeed any visitors.
Absolutely. Always good to update those train stations, isn't it, Kate? Thank you very much indeed. Kate Moody there with the business. We're going to take a short break. Don't go